Hi everyone. So here we are in video 7, and we are starting to really get into the basics of tax law. So in this video, we're going to talk about income. Okay, we're going to cover the most basic forms of income, where they fall on the 1040 and the schedules, and I want to try and look at some of the examples of how it's reported, like on a W-2 or a 1099 of some sort. We'll look at some Social Security statements, and all of these you can find in your testing booklet. I'm just kind of scouring through your testing booklet to give you some examples of what you will see when we get to those things. We're going to look at the self-employed Schedule C, which is an advanced preparation. Someone will always be there, but we're also going to teach you guys how to do it as well, even if you only certified at the basic level. And then the last thing here is going to be adjustments, okay? Dealing with I'm basically going to tell you what these things are, okay? And where they fall on the 1040, and what are the most basic kinds that we see. I didn't put on there, but the very last thing we'll do is we'll answer a couple of basic exam questions. We're going to look at question 1 and question 6, okay? All right, so as far as income is concerned, basically, we report almost everything, especially if there's a form that comes with it, okay? So with wages, we have something called a W-2, okay? So I kind of want to go through all of them, and then I'll go find where they're at on the 1040, and then the last thing I'll do is make sure that I go through and find some examples of what a W-2 looks like. What's a 1099, things like that. And I see I have already made... It should be 1099 R. There we go. Okay. All right. So sorry about that. I put the wrong letter there. So let me get back into this. Okay. So wages will always normally come in the form of a W-2. Okay. That's just what it is. Those are the most common. That's the most common kind. When you're an employee of another, you should be sent a W-2 it has to be in the mail by the end of January, and typically most people get them in early February. Okay. Retirement income is very common with us because we get a lot of older folks that come in and do stuff with us. We see Social Security statements and 1099-R, which means retirement. So these are disbursements from a retirement plan of some kind. Interest and dividends are on what we call a 1099 INT or a 1099 DIV. Capital gains and losses are reported on 1099-Bs, typically. Okay, if it has to do with like a mutual fund or something like that, then you're going to get a 1099-B. Sometimes we have capital gains and losses that we don't have to worry about as far as that go. And again, capital gains and losses just means that you've sold a capital asset for either a gain or a loss. So the proceeds exceeded its basis. Okay. We're going to look at self-employed income and expenses. Okay. So typically we see income reported on what they call 1099 MIS, MISC, or a 1099 NEC, non-employee compensation. This is new. Okay. That's something that's brand new for 2020. When you have folks who only have non-employee compensation, so you're paying them as an independent contractor, then you use the 1099 NEC form. Any other kind of miscellaneous income that needs to be reported, like rents and royalties, it would go on a 1099 MIS. Okay. Rental income and expenses. Okay, we're not going to go deep into that, but normally those rental income is reported on a 1099 MIS. Okay, and then it's also reported on Schedule E. Unemployment income has its own W-2. It's called a W-2G. Okay, and then we'll just discuss, we've already talked about economic impact stimulus payments and the fact that they're non-taxable, but CARES Act grants for students, and then scholarships, grants, and fellowships reported on a 1098T typically. So what I want to do before I get into adjustments is, and the Schedule C, I want to go ahead and give you some examples of what these things look like and where they fall on the 1099 or on the 1040. So here's my 1040. Okay. So the front page of the 1040, all that demographic stuff, and then you start to see individual lines, wages and salaries. The total for all wages and salaries on forms W-2, we're going to come up here. Okay. Interest and dividends, that's taxable. Go over here. IRA distributions, 1099-R, pensions and annuities, 1099-R, those things go here, okay? Social Security benefits, these first boxes tend to be for the total amount that has been received by the taxpayer. If an amount shows up over here, that means it's taxable. Social Security benefits, the most of Social Security benefits that will ever be taxable is 85%. Okay, and that's if they have other income just besides Social Security. Okay, but a lot of times we get a lot of retired folks that come in, all they have is Social Security, non-taxable. Okay, you have to have a certain amount of other income for any of your Social Security to ever be taxable. Okay, so the total dispersed is going to go here, and then any taxable portion is going to go over here in the lines over in the B column. Okay, capital gain and loss in total gets reported here, but you're going to see other forms and schedules that get printed out. Schedule D is one of them. Okay, but the total gets reported here, and then any other income from Schedule 1. Okay, Schedule 1 right here, additional income. Okay, so if you have Schedule C profit, it goes here, and then they carry it over to the 1040. Other gains and losses, rents and royalties, farming, unemployment, those things get reported in the Schedule 1 and then combined, and that combined number from line 9 here gets reported into the 1040 right here. Okay, so right, and then you total everything, and that's where your gross income comes in. Okay, all right, so that's kind of where things fall. Okay, I want to go ahead and I'm going to go into this testing booklet. Okay, so this is in your testing booklet if you ever wanted to see what some of this stuff looks like. When we get to our last video, video 9, where we start going through these scenarios that have to be prepared in TaxSlayer, we're going to go through a lot of this stuff. Okay, so here's one of them. Here's what a W-2 looks like. Okay, it's got your Social Security number, your employer identification number, the employer's name, and the employee who has to report. Okay, wages, tips, and other compensation, federal income tax withheld, very important numbers in there. And then 3 and 5 here, they're either the same as box 1 or they're more. Okay, there are going to be times when, say, you contribute to a retirement plan, or you contribute to a health insurance plan on a pre-tax basis. Okay, that just means that those items aren't taxed federally now. It means they're going to be taxed possibly federally later, but they're still subject to Social Security and Medicare taxes. So that's why you see these things different. And then we want to make sure that we report everything as is, including their address. Sometimes a W-2 has a different address than what the actual current address of the taxpayer is. We want to make sure that we report everything on the W-2 as is. You're going to see items in line 12, items in 14. Sometimes we won't see it in Wyoming, but if they have a W-2 from another state, it's possible that state is a taxable state for wages, and you're going to see items down there. Okay, so that's a W-2 there. A 1099-R kind of looks like this. So retirement distributions. Okay, so it looks kind of the same, but it's a little different. So you're going to see a gross distribution and a taxable amount. Typically, those two numbers are the same. Okay, if they're ever not the same, that means you need an advanced person to come over and help you out with that particular form. Okay, all right, federal income tax withheld is in here. If there is any, sometimes they're not, but a lot of times there is. Okay, distribution codes are very important. Okay, so the most common distribution code is 7. It just means that they're over the age that they need to be, over age 65 typically, and they're taking distributions from their retirement account after they've reached a certain age. Okay, there are a whole bunch of distribution codes. If you ever want to look at them, your resource guide has them in there. Okay, and the one we don't want to see is distribution code 1. That means that they have prematurely taken money out of their retirement account for some reason, and there's going to be an additional tax on it, 10%, unless they use that money for something specific. Okay, there are reasons. One of them is because of COVID-19. Okay, if they were affected to a point where they had to quarantine, they got the disease, somebody in their house had to quarantine, if they couldn't work because of COVID-19, they can take a distribution up to a certain amount from their retirement account and not have it subject to the additional 10% penalty. Okay, so just kind of something in there that's interesting as far as this goes. Okay, all right, here's another one. This is typically what we see. So the taxable amount and the gross distribution are the same. Let's see what else I got in here. Here's the Social Security statement. Okay, a lot of times these are gray and pink. I don't know why. And they bring them in and they're on recycled paper. They tear really easily. But this is kind of what they look like. So our most common, the one we want is box 5 in the shaded. That's the one we report. And then if there's anything in federal income tax withholding. Okay, a lot of times there's not anything there, but if there is, we want to make sure that we are reporting that. Sometimes you get 2 with married individuals. Okay, excuse me. So sometimes our 1099 divs and our 1099 miscellaneous and our 1099 interest forms look like this. Okay, so you have boxes for ordinary and qualified. All of that means is qualified dividends typically have a different tax rate schedule than ordinary dividends, but that's it. All these numbers just get put into the appropriate boxes. Okay, interest forms, they can come like this. Typically, the only box they have with a number in it is interest income. Sometimes they have numbers in other boxes. Okay, but proceeds from broker and barter transactions, that's a schedule, that's a 1099B, where capital gains and losses are reported on securities. Okay, and it looks like this. Okay, this one only has 2 transactions, so I would only enter 2 transactions into TaxSlayer. But sometimes they have, oh my gosh, so many. Sometimes there are just so many, and I look at it and I'm like, oh, because they all have to be entered in one by one. So they're really easy to follow. They tell you the date acquired, the date sold, the quantity sold, which you don't really need, but you need the proceeds and the cost basis, and then if there's anything over in the other boxes. And you just kind of report everything as is. But these things are tough because a lot of times there's a lot of transactions and you have to enter them in all separately. And that can be tough. That can be really, really tough. And it takes a lot of time, and then someone has to come and check it, and they have to go through everything individually. So, but that's just kind of, you know, a way that you can see stuff like that. Okay. Let's see, what else do I got in here? Here's a Form W-2G. If there's ever any gambling winnings, we don't get many of those, but we have got them before. If they're reportable from the casino or wherever it was that they want them, they're going to get a W-2G. Oh, I'm sorry. So unemployment compensation is on a 1099G. Gambling women's are on a W-2G. My bad. Okay. Let's see, what else we got in here? I know I have something else that I wanted to talk to you about. 1099 something. Cancellation of debt. Here's a 1099G. So for unemployment, we're probably going to see a lot of that this year. So we just report it like normal. Unemployment compensation is taxable, no matter what. So we report everything as is. Here's a 1099 NEC. Okay, so if an individual is self-employed or has a side job where they aren't considered an employee and they make over $600, it's reportable on one of these forms. Okay, so they came up with this 1099 NEC just for non-employee compensation. I expect to see quite a few of these, honestly. The 1099 MIS looks a lot like this, only they have a lot more boxes, and that's where you would see like rental income, royalty income, any other kind of income that's not considered wages or non-employee compensation. So that's kind of where everything's at there. I know in some of our testing questions, they talk about required minimum distributions from retirement accounts. When we get to those questions, I'll talk about them then, but I'm not going to talk about them particularly right here. Okay? All right. So that basically is my discussion over income. Like I said, it's a rundown, fast kind of thing. If you want to look through a little more, You know, if you have your tax book still from 3070, go ahead and read through that. If you want to go through the training guide or the resource guide, you're more than welcome to do that. But my discussion about wages and other income sources stops here. The next piece to this video is going to be talking about the Schedule C. So if you want to take a break, go ahead and do that now. Okay, so Schedule C. Okay, so if you have anybody that receives a 1099 MIS or a 1099 NEC has to create a Schedule C. If you receive wages, basically, payments from anybody and you're not considered an employee, you're basically considered self-employed or an independent contractor, and you have to form a Schedule C. Okay, this triggers self-employment taxes, and that's not a fun thing. Okay, so the profit on Schedule C earnings. Okay, so profit simply means earnings less expenses. Okay, some people don't have many expenses. Some people just have mileage or something like that. But that profit amount, okay, is going to be subject to self-employment taxes. And that's a lot of times when people owe money to the IRS, it's because they owe self-employment taxes, not necessarily because they owe federal income tax. Okay, so a Schedule C is for anyone considered self-employed, or if they have self-employed income, like a side job. You can still be, so like I'm not self-employed. Okay, I am an employee of the University of Wyoming, but I have a side job where I receive a 1099 NEC. Okay, so that doesn't mean I'm self-employed, but it means I have self-employment income, and that means I have to use the Schedule C to report my income and expenses from that activity. Okay, some people do more than one activity. That means they have several Schedule Cs. It is what it is. Okay, so that's kind of how that works. So these are for independent contractors or owners of single member LLCs or sole proprietorships. Okay, normally in order to report income, they get a 1099 in some form. Not always. Sometimes they just have cash income, and that's okay. Okay, still reportable, but every source of income when you're self-employed or you have, you know, independent contractor status, you have to report it all. Okay, any expenses that you want to put on your Schedule C need to be ordinary and necessary to whatever the activity is. Okay, so not personal in nature, but ordinary and necessary to the business. Our common one is mileage, and I'll talk about that here in a second. So what I wanted to do first was I wanted to go to the Schedule C, and I want to show you what it looks like. Okay, so our Schedule C is basically profit or loss from a business, a sole proprietorship, or a single member LLC. Okay, so any information about the proprietor, if you have a business name, social security number, the code is just, it always just comes down to what kind it is, and you can go ahead and look up those codes online. Okay, the accounting method most of the time is just cash. Okay, did you materially participate in the business? The answer should be yes. Okay, did you acquire it in 2020? You can check there if you did. If it's not, if it's older, you don't have to worry about that one. Did you have to file any Form 1099s because of your business? It's either yes or no. Okay, and if you were required, did you do it? Yes or no. So those are there. Then all your income gets put in here. So this is cash. This is from 1099s. It should just be a running total of our income for the year. And then they have a whole bunch of expenses in neat, pretty boxes. Okay, so if you have an expense, say for advertising, you would put it up here in line 8. Okay, if you have depreciable assets, the depreciation expense will go here in line 13. Okay, did you pay on a mortgage or did you pay interest? Did you have office expenses? Did you rent or lease machinery? Did you have deductible travel and meals? Things like that. Okay, remember meals are always 50% deductible. Okay, did you have wages that you paid? Okay, so this means actual employees that you issued a W-2. Okay, and then the other expense line is for anything that doesn't neatly fall into one of these categories. Okay, from there you total your expenses and you find your profit, and then you work your way there. Okay. The other form that's important that I didn't put up here is the Form SE, the self-employment tax form. And it takes this tentative profit number down here, right here in line 31, and applies self-employment taxes to it. And then those taxes get reported into that Schedule 2 there. So the backside has information for cost of goods sold and inventory. That's out of our scope, so nothing can have that. And then if you're going to deal with mileage, okay, you need to know a couple of things. One, you need to know when it was placed into service. Okay, so if it was before 2020, great. If it was during 2020, you need to know the month. Okay, month, day. I mean, we estimate a lot of times with the day, but the total number of miles you drove during 2020. Okay, and then we break it up into business and commuting. A lot of times, the only thing I ask about is business miles. What are your business miles? Okay, and we figure that out from there. Okay. The other questions here have to be answered. Is this your only vehicle, or do you have another one that you can use that you don't use for your business? Okay. So off-duty hour vehicle, is it personal use? Do you have written evidence to support your deduction? I hope that answer is yes. Okay. We always tell our individuals you need to track your mileage. Is it written down? The answer should be yes. Okay. So those questions have to be answered. For 2020, the standard business mileage rate is 57.5 cents. Okay, so for every business mile they drive, they can take a deduction of 57.5 cents. That's why this is so important. Okay, they can give them a really nice expense. That's not necessarily a cash expense. It's the use of something kind of expense, just like depreciation. Okay, but this is an important piece here. Okay, so making sure we understand how all that works is a big, huge part of that. So, and TaxSlayer does a really good job of making sure that all these questions are answered in the portion for use of a vehicle for your business. Okay. All right. So that's the Schedule C. Okay. This tentative profit number right here will get put into Schedule 1. Right here in line 3 of Schedule 1, and then this is totaled, and then it goes into the 1040. Okay. All right, so that's my my discussion over self-employed Schedule C. Something that's a little bit new this year is in order to prepare a Schedule C, you have to have an advanced exam passed. Okay, but there will always be someone there who can prepare a Schedule C. So what I'd like to do is get everybody to watch how it's prepared. And then if you want to go in and pass that advanced exam, we can help you through that so you can prepare them on your own. Okay, so go ahead and take a break if you need to. The last two pieces are going to be adjustments and the basic exam questions that we'll cover with this video. Okay, our last slide in here before we get to the basic exam are adjustment deductions. Okay, so in our tax return, we report all of our income, okay, and then we start to take away pieces of the income. Okay, so they're not taxed. That's what deductions are. And we have two kinds of deductions. We have things called adjustments, or we call that for AGI deductions. And then we have from AGI deductions, which are typically the standard deduction or itemized deductions and any other deductions that fall below that. Okay, adjustments, most adjustments are listed on Schedule 1 underneath where all the other income is. Okay, there are a couple, okay, one adjustments that's actually listed on the front page of the 1040. Okay, so the one that's on the front page of the 1040 is this guy, charitable contributions if you take the standard deduction. So that's something that's new this year. So if your taxpayer uses the standard deduction and he had cash contributions to a charitable organization, okay, then he can deduct up here as an adjustment $300 worth of that cash donation or less. Okay, so the maximum is $300. If you only contributed 10, then you put $10 in there. But the maximum per return is $300. Okay, if they itemize, then they follow the itemized rules. okay? But if they don't, then, and most of our taxpayers use the standard deduction, we have to ask about cash contributions, okay? So that's that one. All the rest of the adjustments are in Schedule 1. Okay, so after all this, here are all of our adjustments to income. Okay, a very common one is educator expenses. Okay, so if you are a teacher and you spent money to get your classroom ready or whatever it was to help your students, you can take an adjustment for $250. That's the max. It's really sad that that's the max, because I think I spend more money on that for my students, and I can't even imagine what K through 12 people spend. Okay, but there is one rule for that. Okay, they have to work in that classroom, I guess, for 900 hours during the year. Okay, considering full time is 2,040, I think, hours during the year, 900 is less than that. So basically part-time, but they have to put in 900 hours during the year to be able to qualify for that $250 adjustment. All right, some more common ones. We do get a couple of HSA stuff. The nice thing about TaxSlayer is we enter all the information and it figures out the deduction. Okay, I wouldn't worry about moving expenses. They only qualify for military anymore anyway. Deductible part of self-employment tax. So if you are self-employed or you have self-employment income and you have to create a Schedule C, it's going to generate self-employment tax. The cool thing is half of that number can be used as an adjustment. Okay, you still have to report the tax and you still have to pay it, but you can deduct half of that number as an adjustment on your taxes. Okay. These things are out of our scope, so I'm not going to really talk about those. Any penalty on early withdrawal of savings, so that's when you get that distribution code 1. We don't want that, but that's there. That's where that that adjustment. You can, wrong thing, sorry. Penalty on early withdrawal of savings. So that's if you take a CD out before you're supposed to and you get a 10% penalty. You can sometimes take that 10% penalty and deduct it, so it's not taxed. So alimony, okay. The only time, so any more alimony paid is not a deduction. It just all depends on when the divorce agreement was put into place. So if your divorce agreement is after 2019, then we don't have to worry about who reports the alimony, who gets a deduction, because there is no such thing. If it was 2018 or before, then there are certain rules for it. But we don't see that. Child support's never taxable, so IRA deduction, so if they're contributing to an IRA, they can get a deduction for that. The most common one we see is student loan interest deduction. Okay, so normally they have a form that says this is what I paid, and then what they can do is we can put that number in. The maximum for any return is $2,500. Hopefully nobody's paying that much in interest, but I'm sure it happens. Okay, and then we also have the tuition and fees deduction. The credit's better, so I don't like to use the deduction unless I absolutely have to. But these are our deductions, okay? So we total them up and then we put them over here into the 1040 on line 10A. If there's cash contributions up to a max of 300, goes here. And then our total adjustments here, we take line 9 minus line 10C, and that's our AGI. So that's my spiel on income, Schedule C, and adjustments. Okay. The last thing I want to do is go through 2 more basic exam questions. Okay, so these are going to be, and I gotta find them though, so hang on. See, where is my basic exam? Volunteer test instruction, basic course scenarios. So we're gonna do basic exam question 1. Okay. And then we're going to do basic exam question 6. So we have Sheldon and Odessa Sanford. Sheldon and Odessa are married and elect to file married filing joint. Sheldon is 73 years old and Odessa is 64. Odessa earned $33,000 in wages. After 30 years of service, Sheldon retired from his job in 2018. During his career, Sheldon contributed pre-tax dollars to his 401k through his employer, so his retirement when he receives it is going to be taxable. Sheldon also receives Social Security benefits. Sheldon and Odessa are not blind and cannot be claimed as dependents by another taxpayer. Okay. Odessa is not considered elderly, but Sheldon is. That comes into play for the standard deduction, which we're not going to talk about until the next video. Okay. They are both U.S. citizens and have valid Social Security numbers. So the first question says, Sheldon must take a required minimum distribution from his retirement plan by December 31st, 2020 to avoid an additional tax due. Okay. For 2020, that's false. So the CARES Act and any legislation passed in 2020 because of the COVID-19 pandemic, they got rid of required minimum distributions for 2020. Okay, they call it the Coronavirus Relief Act or the CARES Act. Okay, so in 2020, they do not have to take a required minimum distribution. Okay, other years, once they reach a certain age, and it's either 70 and a half or 72, they have to take a required minimum distribution from their retirement plans. It's just a rule of the retirement plan. Okay, but in 2020 they don't. It's suspended for 2020. So that question is false here. Okay, the next scenario question we're going to answer is 6. Okay, and here we've already talked about Aiden and Sophia Duke, but I'm just going to kind of go through it. So they are married, they file married filing joint, and Aiden died in 2020. Okay, Sophia, age 56, has not remarried. Aiden had $5,000 in wages, which is reportable because he was alive when he earned them, and Sophia had $51,000. She paid the cost of keeping up a home and providing all the support for her 2 children, Mia and Oliver, who lived with them all year. Mia is 11 and Oliver is 15. Sophia does not have enough deductions for itemized, but she did make a charitable contribution, okay, of $500, and it was cash, which means she can take the maximum of $300 on her for her adjustments. They're all U.S. citizens with valid Social Security numbers. So it says, what amount can Sophia deduct as a charitable contribution adjustment? Since she's using the standard deduction and she made a cash contribution, the maximum she can deduct is $300, okay? But she made $500, so our answer is C, okay? The $200 she can't use, she can carry forward and hopefully use on next year's tax return. Really awesome thing there, okay? So that is this training video. If you have any questions about any of this, please let me know.